It's time now for Trading Nation. And today we are trading this increasingly shaky market. Get this. The S&P 500 down 7 days in a row. Could make it 8 if we finish lower today. Some suggesting the underlying market fundamentals may be even worse than that. Let's dig in. Rich Ross and David Seaburg are your Trading Nation team today. And David, I mean, how weak or maybe strong is this market right now? I heard last night that only 5 Dow stocks are responsible for the entire gain of the Dow this year.
Yeah, no doubt. I mean, breath is terrible. I mean, but, as it's very clear, I mean, it's all about, you get a jobs number tomorrow, we get the election. It's election driven right now. So in the near term, until next Tuesday, we're basically in a market that's going to could go in either direction. Rallies will not be long-lived. They'll be sold. And any pullback will probably be relatively shallow, at least in the near term. But I'll tell you what. The elections dictating the way this market's being driven, but longer term, it's going to be central bank policy. I mean, you're looking at global yields. You look at sovereign yields moving higher. I mean, that is going to put a cap on valuations in the equity market. So I look at it and say the longer term issues are more about yields and obviously earnings. But the shorter term issues, Brian, it's very clear. It's the election and obviously the jobs report tomorrow. If we get a rally in the jobs report, it's a sell.
Good grief. What if we get a what with a what in the jobs market?
If we get a bounce tomorrow based on just the jobs report, it'll be a short-lived rally. I don't believe
if we get a decent report, stocks go up, you're selling that rally.
Sort of correct, no doubt. At least until we get the election. The election, everything's predicated on that right now, at least in the near term. We can't have another Brexit-like moment, especially going into a year where all these hedge funds, our performance has been so scattered, They can't take the risk of getting ahead of that trade.
I actually forgot we had a jobs number tomorrow. I hold my hand up and be honest about that. So much going on. I mean, usually it's like, oh, the jobs number. Rich Ross, when you dissect the technicals of this market, you look at all the stuff that you do, right? Up, down, volume, whatever. Is the market on shaky ground? Or has it just been kind of just a bad little run?
No, Brian, it's the former. We are on shaky ground here, and my fear is that there is a view that politics are the panacea, which will cure what ails us. But the real problem here, Brian, is not the lack of leadership in the polls, but the lack of leadership in the market itself. Bring up the chart. I'll show you exactly why we go down to 2050, 25.0. It's another 2% at a minimum from here. You're looking at that short-term chart there where we see that false breakout to a fresh all-time high. We've now broken below those Brexit highs at 21.20, but now that's just hindsight, Brian. You've got the 200-day down around 2070, but that provides little comfort for a market, once again, which is sadly lacking in leadership here, Brian. And if you can zoom out real fast, we're going to look at this weekly chart here. This is where it gets real dicey for me, Brian. You've fallen back into this multi-year trading range. You've gone absolutely nowhere for the last 2 years. You have nothing to show for it. Where's the leadership, Brian? You've lost healthcare, discretionary, bond proxies, cyclicals with crude failing into resistance at $52. You're left with technology to carry the mail at the tail end of a 7.5-year bull market, just as we were left with in 2000 when we had another 8-year cycle transition in the presidential election. Brian, we've got some issues here, and they're bigger than just the election.
They are, and guys, thank you very much, David and Rich. For more Trading Nation, go to tradingnation.cnbc.com.
I'm often asked why a company stock drops after a good earnings report. Well, earnings are only half the story. Frequently, the market will focus on what the company says about its future prospects. If future expectations don't measure up to current ones, sometimes investors will look to sell the stock.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.